This is the AI News Flash for February 25th, 11 a.m. UTC. But first up, OpenAI's ChatGPT has rolled out advertising, marking a major divergence in AI business models. ChatGPT began showing ads to US free tier and Go Plan users on February 9th with a CPM of $60, roughly 3 times Meta's average rate. The minimum ad buy is $200,000. Ads from brands like Expedia now appear right after the first prompt response. Paid subscribers on Plus, Pro, and Enterprise plans remain ad-free. In contrast, Anthropic is explicitly positioning itself as an ad-free alternative, arguing that advertising could compromise AI trust. The two leading AI companies are now pursuing fundamentally different monetization strategies. Next, skeptical investors are actively hunting for ways to short the AI frenzy, according to the Wall Street Journal. Hedge funds have already pocketed roughly $24 billion from shorting software stocks in 2026, even as the sector's total market value has plunged by nearly $1 trillion. Adobe has been hit particularly hard, with its market cap collapsing from $350 billion to $107 billion. That's a roughly 70% decline. What makes this especially ironic is that many of these short sellers are using sophisticated AI-driven trading systems to identify and exploit software companies' vulnerabilities. AI is effectively being used to bet against AI. Moving on, semiconductor equipment giant ASML has published its 2025 annual report, citing AI demand as a long-term growth driver. Full-year revenue came in at 32.7 billion euros, with net income of 9.6 billion. Fourth quarter orders hit a record 13.2 billion euros, nearly double the 7.1 billion from a year ago. For 2026, ASML guides revenue between 34 and 39 billion euros, implying roughly 15% growth at the midpoint, with EUV machine sales expected to increase significantly. The record order book signals that chip makers are expanding capacity plans based on what they describe as more robust expectations for sustainable AI-related demand. And finally, Bloomberg reports that Deutsche Bank and Goldman Sachs are deploying AI to detect trader misconduct. Deutsche Bank is using Google Cloud's machine learning tools to analyze the tone and phrasing of traders' phone conversations, looking for signs of potential misconduct that traditional keyword-based systems would miss. Goldman Sachs, meanwhile, has deployed autonomous AI agents built on Anthropic's Claude model for accounting and compliance workflows. The move signals growing trust in AI among major financial institutions, not just for revenue generation, but for internal governance and risk management. That's all for this AI News Flash.